Alright, so I'm just going to continue. So the last thing we saw was the buying climax bar that terminated the upswing. It's right there. So let's continue from that point. Volume on the reaction diminishes appreciably compared with volume on the rise from December 29th low, a bullish indication. So what he's talking about is this. You see? From that buying climax, there's a pullback, but look at the volume on it. Is it big? No, 1, 2, 3, 4. They're all less than the climax, and it's not that much, all four of these bars, as the market pulls back to test the breakout. Alright? Anyway, so it's a low volume pullback, and from the December 29th low, compared with the volume on the rise from the December 29th low, a bullish indication. What's the bullish indication? The low volume pullback is the bullish indication, showing that selling pressure is light. On the 16th, the close near at the high of the day, a bullish indication. So what he's looking at, this right here, he's looking at the progress in the closes and the progress relative to the high-low range, and saying that it is a bullish indication that the close is a high-end close near the high of the day. That is a bullish indication, but it's a clue. It's not a trigger to go long or short. All it is a clue. Alright, it could be like, initial buying, for example. But there's something more important in this pullback, which I'll get to in a minute. This is the first sign that the reaction is almost over. What is the first sign? The high-end close, the progress in the close, the position of the close. So here we have now a buying opportunity in expectation that the advance will resume. Stop. You see, whereas the market is testing the breakout, you have that fourth buying opportunity. We covered the three already. This is the fourth buying opportunity on the test of the breakout, the reversal back up, and this is indicated by the close of the bar. He's looking at the closes of the bar. The high end close is a bullish indication, and for him it's a trigger. Okay, for him it's a trigger. And that high end close, he's interpreting it as the reaction coming to a close, terminating. Okay, but there's something more important about it. I'll go over in a minute. Further confirmation comes of this in higher support on the 17th. Taking a look at the 17th, that is just a higher low, and he likes that. The fact that it's a higher low, he likes it, and he says this is higher support. It's a higher low. Okay, meaning the market didn't go lower after that high-end close. So you're looking at a high-end close as a bullish indication, and you're looking at the higher low after that as a bullish indication also. Alright, and that higher low came on almost completely drying up volume. So he's piecing together the puzzle. You have a high-end closed bar, you have a higher low, you have very low volume, and the volume shows that it's almost totally dried up. Alright, so complete drying up in volume on the dip to the low level on the 19th. Where is the 19th? I think this is the 19th. This must be around here. So again, all this is showing is that as the market is pulling back, there's no volume coming out. Alright, so you go back. Alright, so let me just try to explain this. You have your high-end close, bullish indication. You have a higher low, bullish indication. You have a test of the high-end close bar with very low volume, bullish indication. 3 bullish indications so far. Okay. So this is a further confirmation, comes in higher support and an almost complete drawing up on the volume on the same low level on the 19th. The closing price of the 15, 16, 17, and 19 shows support within a narrow zone, mostly about 147, 148. All he's saying is, again, he's going back to the closes. The closes, the closes, the closes. The closes on the 15, 16, 17, and 19th. So this, I think, is... I can barely read the third... hold on, 12. Shit, it's really hard to... 16, 17, 18... Anyway, it's a little hard to identify right in here, but I think this 17, 18, like he's looking for lack of progress in the closes. The concept is exact same as over here. You see these 3 bars, 1, 2, and 3? There's no progress in the closes. What does that mean? Supply is drying up. Similarly, he's looking for the progress in the closes to tighten up. So over here you have the closes tightening up, meaning not tightening up, being clustered. Okay, so being clustered is what the right word. So the close prices on this 15, 16, 17, and 19 show support within the narrow zone, mostly about 147, 148. We must therefore look for the advancing tendency to be resumed. Okay, what is the advancing tendency? He's saying, like, what are you looking for in a pullback? You're looking for supply to dry up. What is an indication of supply drying up? The answer to that is clustered closes and a lack of volume. Okay, so other bullish indications is that high-end close right there and the higher low. Okay, so he's looking for a picture that will tell him that that supply has diminished. Okay, and remember, what you're trying to do in a pullback is determine if supply has dried up, so you can look for evidence of continuation. Remember, rally, pullback, continuation. What we're doing here is analyzing the pullback and looking for indications that tell us that supply has dried up and that continuation of the up move is coming, or as he says, we are looking for the advancing tendency to resume. All he's saying is we're looking for the continuation. All right. Then following 4 days in each which we see the higher tops, higher bottoms, and higher closes accompanied by gradual increases in volume, bullish behavior. I mean, the way I see it, that's your trigger right there. Bang. Alright, why? Because the closes got clustered here, it dipped down, and then bang, right up there, you have your advance in the closes, and there's your continuation signal. Why? Because from close to close, you have a lot of progress. There's a lot of progress between the closes, and it's going to go higher. Okay, not higher, but it's going to continue up. Continuation. So pay attention to the closes on the pullback, and pay attention to the closes on the continuation. That's basically it. And on the pullback, you're obviously looking for low volume and higher supports and all of that. All right. So after that, you have 4 days of higher volume. What is he talking about? He's talking about 1, 2, 3, 4. Up, 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 up. Okay. So this brings the market up within the fraction of the high figure of January 9th. On the 23rd, the volume surge after 4 days, almost perpendicular advance warns us of a buying climax. What is he saying? Again, at the top of a swing, if you have high volume, you have to ask yourself, who's buying? Buying at the top of a swing, like over here, you see this high volume. You have that perpendicular volume, that ascending volume, that arrow up, that line that if you draw it goes up. You see this? All of this? That's not a good sign. So what he's saying is that it warns us of buying climax, and remember, like I explained, climaxes can end trends, but they can also end swings. The climax bar ends swings. A climax wave generally ends a trend. Anyway, but here, in any case, we expect hesitation or reaction due to the influence of the prior tops. What is he saying? Price is at resistance. So what do you expect? He's expecting hesitation. He's expecting a reaction. Remember, when price goes back to resistance, you can have many behaviors. You could have an upthrust, you could have absorption, you could have a test, you could have a reaction, you could have whatever. But what does it do here? As you can see, it reacts a little bit, but then it starts hugging resistance. So this is an absorption. This is how absorption typically looks. Now someone may ask, well, why isn't this distribution? Or stuff like that. How do you know it's absorption? So I'll go into all that. You can generally tell. Anyway. What is it? Now observe that for the following 13 sessions following the 23rd, the market fluctuates within the range of 156 to 151, a narrow range for the average. This is because it is called to absorb offerings representing stock purchases by over anxious bulls who got hooked around the high level before. So over here you have that buying climax bar. There were a lot of buyers here. So as price goes over there, these guys want to get out. They start selling and buyers start absorbing their selling. These prior tops are being absorbed. Sellers who are trapped are exiting their positions for break even, and buyers here are absorbing them. Okay? And it's not reacting that much, which is a bullish indication. In fact, it's not even reacting. I don't even think this is a halfway back reaction. So it is a tight range up there because it's absorbing. Alright. And persuade purchases made by people who are now eager to get out even. Alright, that's just what I said. These guys are caught at resistance. Price goes back to resistance. These guys get out. Buyers absorb the selling. And it's in a tight range. Almost looking like a triangle or a base. And you have higher low, higher supports. An inability to break. There's no selling pressure. It's going to absorb and break. And you could see this. Like, I'll find examples and just show. Some people trade absorption. I'm not a fan of trading absorption because in a lot of markets, especially the yen and all these trickier markets, they will still shake you out. So because the stop is going to be pretty far away, and I don't want to buy it up there while it's absorbing. I don't care if I buy it up higher. I just, the distance between the stop and the entry has to be tight. Like, not that tight, but not that close, but not that far where it's an entire swing. Anyway, where am I? Okay, now all of this is great, but remember, we want to focus in on key behaviors. So watch this note over here that he has. Note that there is also an indication of a minor selling climax. This bar here is the minor selling climax. Okay, the volume on this bar is greater than 1, 2, 3, 4, the prior 4 bars. The volume on this is greater than the prior 4 bars. Okay, and the range is also bigger than the prior 4 bars. And it is coming towards the end of the downswing, not near the top, but the end of the downswing. Okay, so Note that there is also an indication of minor selling climax and a somewhat marked increased volume on the 15th. That's the 15th. Can't really see that good, but this is the selling climax bar. To ensure proper limitation of risk on purchases made at this level, our stop should be placed a point or so under the supporting points of the 16th. Okay, he's using the climax bar. Okay, and putting it about a point or two under the climax bar. Why? Because he wants to limit risk. The stop on these new and any previous long commitments should be raised to a point within the point or so of the January 16th to 19th supporting level after the rally of January 20th. So this is I think that's the 17, 18, 19, 20. So it rallies here. Okay? I can't really see that well. But whatever. The thing is, it continues. You want it slightly under the climax bar. Okay? After the rally. After the rally of the 20th. $16, 17, 18, 19, 20. So in this area, you want it below the climax bar after the rally or the continuation. But there's a lot of ways to do that. The more important point here is how did these swings terminate? How did these swings terminate? It went up, it went down. You had a climax here, and you had a climax here. That's what you gotta know. And what you saw in both cases was widespread and big volume. Big range and big volume. Okay? And what else did you see? You saw that after the climax there was a progress in the close which initiated the correction or initiated the move. So the progress in the close, this is the buying climax at the top. The progress in the close is right there. There, bang, right there. You see from close to close to close, the progress in the closes. That initiated the pullback. And then when it finally got here, and it did this, and then bang, right there. Alright, so what's the difference between the two? Well, you had this buying climax that came from the high and, went down pretty quick. But in this case, you actually had a spring. You had this buying climax here. You had like a little rally up here. Went right back down into a spring position and then reversed back up. Bang, right there. And you can tell from the close to close that there's tremendous amount of progress in the close. From this close to this close, it's the most amount of progress since at least the climax. The climax ends the swing, and then here it starts the upswing. So after this, I'll put the stop slightly under the climax bar, slightly under the spring of the climax bar. Anyway, so that is the important point. And other things are he's cluing things together. I mean, like what else is very important is that it's at an important level. Like this is the breakout bar, right? So what happens? You test the breakout bar. When you test the breakout bar, that's where you want to see if buyers are still there, and obviously they are there. So markets tend to test breakouts and breakdowns. After that, market rallies up, it absorbs here, and then continues. When is this absorption completed? It is completed by February 30, 31. He says about February 9th. It's somewhere around here. 9. Okay, great. It's done on February 9th, when after closing almost at the top of the prior week Saturday, and advancing to new high ground, 160 and 5/8 is recorded. I think this was probably it. Whatever. It's either this or this bar. Alright. Note how the speed of the advance tends to increase the average, gaining 9 points in two sessions, the ninth and the 10th. This is markup forecasted by item 3 in the footnote below. See how the volume increases to 4 million? That's this bar right there. Right there. 4 million shares over these 2 days compared to the previous volumes of 1 and 2 million a day for 13 days past. The exceptionally large volume on the 10th and 11th, plus the failure to record any material gain on the high volume of the 11th as usual, is indication of sub-distribution and a setback. On the 11th, the average makes a high of only 1 point above that of the 10th, and the closes at only a small fraction of a gain on large volume. What's he talking about? He's talking about like right there. Here you have a shortening of the thrust and lack of progress in the closes. Why? Over here you had high volume, and look, the high to high has progress, the close to close has progress. Next, you have good volume again. High to high has progress, close to close has progress. Next, again you have high volume, but what happened? The high to high doesn't increase that much, and neither did the close. It's barely there. It's clustered. What does that mean? That means there's some supply there. Because all that volume, and where's the progress? It isn't there. Why? Because of supply. Now, let's see. Now, as we watch the supporting points for the next 5 sessions, we may find that they're all around 160, 162. Meanwhile, the volume decreases promptly on the dip to 160. This says there's another advance coming. So even though there's some distribution there, you come back here, and what happens? Low volume. So on the pullback from this area of potential distribution up here, or some of the distribution, what does it do? It reacts. When it reacts, what happens? Supply diminishes. So this is again a low volume pullback. So what is that low volume pullback saying? It is telling you that another advance is coming. Now, we might be asking, well, if distribution occurred here, how could you have a low volume pullback that's going to tell you that another high is coming? I mean, they're not gonna sell everything at a range at the top of the chart. They sell piecemeal as the market goes higher. As the market goes higher and higher, they're gonna sell an average. They're not gonna sell everything. In that diagram that everyone sees, where accumulation is at the bottom, and you have markup and then distribution at the top. That distribution at the top doesn't mean that's the start of distribution. You can have preliminary distribution, or you can have distribution on the climax bars that terminate upswings and create pullbacks all the way up into that distribution zone. So there's plenty of areas to sell. So that's the idea. Now, as we watch supporting points for next 5 sessions, we find that all around 160, 162, volume decreased to 160 on the dip to volume decreases on the dip to 160. That tells you another advance is coming because it's a low volume pullback. And then on 17, there's an attempt to run the average up to the new high, which fails. Okay, this is getting interesting now. I think this is what they're initially talking about, like right here. This bar failed, and you had this attempt to go up failed, and you had a threatening bar. Okay, The close is almost on the bottom, and the volume increases noticeably over that of the three previous sessions. What happens? It looks at first that this might be a buying climax preceding the end of the rise, so we bring stops closer. Alright. Okay, before I go any further, this is what Wyckoff says about absorption. It could be absorption versus distribution. Well, how do you know it's absorption? One, from the fact that volume remains low on the reactions. And if it was a distribution zone, volume would be higher on the reactions. But the fact that volume is lower on the reactions tells you, it's not distribution. It's tight, it's a range, it's up there. They're not selling, because if they were selling, the red bars would have bigger volume. Okay. 2, the tendency of the price movement to narrow in a comparatively small range instead of reacting as much as even halfway back also tells you it's not distribution, it's absorption. And 3, from the fact that the recession to the February 2nd volume tends to build up consistently at the same time that there is lifting of the supporting points. What's he saying? Higher lows. Where are the higher lows? This low, this low, this low. It's almost like an arrowhead or like an apex. Those higher lows is telling you that it's not distribution. So again, what are some of the indications? The pullbacks do not have heavy volume. The pullback didn't even go to 50% retracement, and higher lows on subsequent reactions tell you that this is absorption, not distribution. Okay, no follow through on this threatening bar as well. So that's all telling you that if there is a break, they're buying it, because you have a pullback right here and it's immediately bought. And you have higher, so I mean, all the strength indications are there. Anyway, so now the market goes up here, and you have some distribution on this bar, but that's just one bar. There's some selling. Alright, now that creates a little pullback. The pullback is on low volume, and that low volume is telling you that the sellers are not willing to take the price lower, and that means that they want to sell at higher prices, and that therefore there's an advance coming. Price attempts to rally here, and what happened? It gets stuffed. But this pullback has, again, no follow through. So what's this telling you? Advance is coming. And finally advances up to here. Again, notice on this advance you have green bar, green bar, green bar, green bar, meaning close is greater than the open, close is greater than the prior close. 1, 2, 3, 4. Okay, now be wary. The volume on this is greater than all the other volume. Now what's that telling you? You have the high, 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 high. The fourth highest bar on the top, the highest bar, has the most amount of volume. That that is a blow off. But we'll talk about that. The point on February 14th. Okay, let's see. Okay, this point, before I go there, let's talk about this bar. This bar was threatening. Why? Because the bar before it tried to rally from a low volume area, from a low volume pullback. It attempted to rally, but this bar right here stuffed the rally on higher volume. This bar was quote unquote a threatening bar. This bar was a bar that was saying that was stuffing, not stuffing, but stopping the rally. Now what happened? This was a bearish indication, right? And this is where markets can get kind of confusing. Why? Because you have a bearish indication here because of the shortening of the thrust and the lack of progress in the closes. So that's a bearish indication. It pulls back and gives you a bullish indication because of a low volume pullback. Then it gives you a bearish indication because the rally was stuffed. But the fact that the rally had no downside progress gives you what? A bullish indication. So this gets a little tricky, and it's not easy for a person to interpret this because you have bearish, then bullish, then bearish and bullish. So sometimes you just chill out. Like, if you try to read every indication and flip back and forth, it's going to be very problematic. So if it's not clear, it's not clear. And many times you'll have this because the bulls and bears are fighting, and when they get into it, it's really not. It's better just to say, you know what, I'll wait for the retest. Let them, figure it out. I'll wait for the retest, just to make sure, because the market will try to confuse you. All right. In fact, it's done all the time, um, through the shortening of the thrust and breakouts. It's done all the time. So right here, it's a back and forth confusion. So just know this. It's up and it's moving sideways. Back off. All right. Now, though, it goes to new high ground, absorbing the overhanging offerings of whatever. And on the 21st, to a new high, the higher and a higher close and volume up to 5 million shares, thus far making progress in proportion with the expansion of volume. Okay. We now become very suspicious and advance on such large volume. Okay, that is a buying climax bar. Okay, at the top of a swing. But what else? What else is telling you something? Not only does it have big volume and it's at the top there, and public is getting in. But what else is really a problem? What is the key indication that's telling you that this has gone to shit? You know what? It's this bar. Why? Because all that volume in that bar could not hold. The day right after such a strong bar, that gives the appearance of big range and big volume, is characteristic of a climax bar. What is telling you that it's gone to shit? It's the bar right after it, which has a lower high, lower low, and a lower close. They couldn't hold the low, and immediately a red bar occurred. So that right there is an indication of significant distribution. Okay? All those traders up there are trapped. They're all trapped. All right, which means, and if you have that much volume, who sold a huge line? The CM sold a huge line right there. The volume says so. In fact, this volume is so high, it is actually as high as the selling climax for the trend, the initial volume off the bottom coming from there. This volume rivals that. That began the trend, that ended it. Okay. So now this tells you that the volume surge may be climactic. Obviously it's climactic. Accordingly, we move our stops up, and we observe the next day a lower high, lower low, lower close, which is very bearish. What's a footnote here say? All this is saying is they're unloading. Alright, now there was some distribution here. You see over here, these 3 days. So this swing has a lot of selling on the top, because there's just a lot of selling. Alright, so basically at this point I want to stop, but I just want to kind of touch on the important points. Important points is, again, you have a climax bar that terminates the upswing, with evidence by the following bar that is a red bar, lower high, lower low, lower close, does not make a new high, instead makes a lower low and is indicating that the prior bar cannot hold its close, the prior bar cannot hold its low, and it's not making a higher high. Alright? So that terminated the swing, and that swing just happened to be on top of a trend. Okay? So that bar is important. This bar right here was a selling climax bar. This bar here was a buying climax bar. This bar here was also, this bar was selling because of a lack of progress in the closes, lack and a shortening of the thrust from high to high. Other here you have your climaxes here as well. And heavy volume going down, then you have volume off the bottom. So you really covered a lot of this uptrend. And what other behaviors were really important was this absorption right in here. Very important. The progress in the closes. What else? The springboard. So this study of this uptrend is phenomenal. It goes over selling climax, volume off the bottom, the rally strength. It goes over closes, telling you there's a lack of supply and to expect continuation. It goes over the springboard. It goes over the rally, the climax, buying climax bar up here, the pullback to support, all of that. The minor climax bar right here, then the rally, the sideways movement, when to expect absorption versus distribution, saying that this was absorption from this prior tops here, absorbing that and going into the climax and the failure of the bar to hold. So all of these behaviors you see every single day in the market, even on an intraday basis, every single day. Alright, so that covers today, and I think we've done the uptrend. So now we're starting to focus on the downtrend, this entire piece here. Okay, and how all of that, the behavior around all of that. Alright, take care. Bye.